Welcome back. You're still tuned in to Midcap Radar on CNBC TV18. It's time to focus on Epigral. The company has reported a mixed set of fourth quarter numbers. The revenue has declined while the margin has expanded to 30% in Q4. We have Maulik Patel, the chairman and managing director of the company, joining us now to take a few questions on the numbers and most importantly, the business outlook. Maulik, good afternoon. Thank you so much for joining us. Well, in the previous conversation that we had, you had indicated that the volume growth could be around 18 to 20%. It's coming at 15% for FY24. Can you give us a sense of why it's slightly lower than that mark, and what's the volume growth outlook in FY25 considering there's a lot of capacity coming on stream?
Yeah, so you are right. Our expectation, because we have commissioned a lot of projects in last 1.5 years, but because of the subdued market in the export region, export specifically, our volume has little reduced, but still we have increased 15% volume growth in this current in the last financial year. And current financial year also, we are expecting 15% volume growth as we are expecting, and we are commissioning new projects, our capacity expansion of CPVC, our CPVC compounding capacity, and also chlorotoluene, which is an import substitute molecule, we are also commissioning in the first half of the current financial year.
Mr. Patel, now when we're talking about the quarter gone by, volumes went higher, but revenue actually dipped. So on a sequential basis, on a year-on-year basis, give us a sense of how realization trends panned out, number one. Number two, going into FY25 and Q1 especially, have prices bottomed out? Can we see an uptick from here on?
Yeah, if you see if you talk about the general chemical market, so domestic market has already picked up in India, but export market is still subdued. So because the volume growth, our major business is coming from the domestic market. So that's why we are able to achieve the 15% volume growth, what we have achieved. And going forward also, the focus is also on the domestic market, and that volume will continue to grow at 15%, even next financial year also.
Okay, so the domestic market will grow at 15%. Exports continue to be subdued. Have you seen any recovery in realizations? You have indicated that there was a dip in realizations anywhere to the tune of 12 to 45%. This is something that we've been seeing in the industry as well. But is there still higher dumping coming in from China? And do you think that is something which could continue in FY25 as well?
Yes, China is dumping all over the world. That is keep continuing, but still our products are import substitute molecule, and people wanted to having a second source other than China globally. So that strategy is played very well, and I think we are getting little higher margin and little higher support from the domestic vendors as well as from the export vendors for that. And that's why we are getting a support as a China plus one strategy.
Wanted to understand is, does that mean there has been a recovery in pricing in the domestic market as well? You spoke about volumes and demand getting better. Is it coming at higher prices?
Right. So, last year it was a very high pressure because the demand was also not supporting. But, on quarter, Q3 onwards, Q4, it was compared to Q3, Q4 was better. And now in the Q1 we are getting more support in terms of the realization also. So we are seeing realization is not going to be major change, but the volume support and the demand support is started coming from the domestic market.
Okay, so Q1, you're saying that realizations compared to Q4 could be flat, but you're saying top line can be aided with volume growth. Now let us come to FY25. Please correct us with these numbers and please give us some qualitative sense. Number one, are you expecting FY25 volume growth in the range of 15%? And this is on a base of an expanded capacity that you currently have. And number two, will you be able to maintain EBITDA margins in the range of 25%?
Yeah, that's what we have mentioned, so 15% volume growth we are expecting majorly is coming from the CPVC and the epichlorohydrin, which is import substitute. And the domestic demand is increasing in terms of the downstream application is also increasing in India. So we are expecting 15% volume growth in current financial year also in FY25. And we are expecting our EBITDA margin will remain around 25%, which we have mentioned.
Okay, 25% will be the margins in that is similar to FY24 levels itself. Volumes will also grow at a rate similar to the FY23 levels. Can you give us a sense of the new projects that are getting commissioned? The CPVC resin, which you commissioned in April, there's CPVC compound as well. What will the total capacity look like by the end of FY25? And what will the initial capacity utilization be? Because right now you were at 83% utilization. Will your average utilization come down in FY25 in that case?
So average utilization, definitely it will come down, but we have increased our capacity from 30,000 ton to 1.5 times, which is 75,000 ton. So to new capacity, which we have commissioned in last month, in beginning of this month, which will take time to absorb, probably will start getting the revenue mostly from the second quarter onwards, and probably will reach to optimum capacity by end of, I think, beginning of Q4.
Okay, so the volume growth of 15% has taken into account the expanded capacity and the new capacity coming onto the stream. One more question, while you confirm that particular statement as well. As far as domestic market and export market is concerned, give us the revenue split, and in FY25 onwards, how do you expect exports to actually surge higher?
So, as a Epigral, our focus is more on the import substituted molecule and the derivatives side, and major revenue is coming. I think in last year, if you consider, our 96% revenue coming from the domestic business and 4% only from the export business. So that's why we are able to achieve the 15% volume growth, because there is no domestic support is very high compared to the export support, export customers. But in this year, we are expecting around 8 to 10% our revenue will come from the export in the coming financial year, and 90% will be from the domestic business.
Okay, all right. So that's what you have figured out in terms of volumes and export breakup as well. You had a target of 5,000 crore of revenues, that is by FY27. You have done revenues of around 2,000 crore rupees in FY24. That means you'll have to grow at a CAGR of 35% in next 3 years to ensure that you reach that mark. Considering the global volatility, do you stick to that mark? And how are you ensuring that you reach that guidance that you had given?
So definitely, yeah, we have given a 5,000 crore benchmark based on the 2022 prices kind of thing. But yeah, we are doing a capex continuously on the import substitute molecule, and 350 to 400 crore capex we are doing on year-on-year basis, and definitely the volume growth will achieve. And probably, based on today's revenue and realizations, I think you can consider 5,000 mark will be around 4,500 kind of thing. But definitely the volume growth will achieve, and we are the realization is also going to be improve going forward, and I think we are going to target our what we have given a target of 5,000 crore in by FY27.
Okay, so you are saying, considering the realizations, it could be at around 4,500 crore rupees, because that was made basis FY22 numbers. But of course, how things go ahead, there could be a 5,000 crore rupee number as well. What happens to debt with all the capacity expansion that is coming by?
Yeah, so debt currently what we have is, including working capital, we are having a 960 CR, which is 200 crore debt, and remaining is long-term debt. We understand that current debt is at a peak level, and going forward we will reduce the debt also along with the capital, our expansion growth, our growth planning also. So I think current level of debt is around peak level. That's what we understood based on the numbers which we have forecasted for the FY25. And going forward, I think the debt will come. I think this come down, and so absolute number, I think it will not come down because of our growth plan. But in terms of the ratios, definitely it will come down.
Okay, so you're expecting ratios to improve. Just to come back to the domestic market and the export market question, you said that this year it was 96% and 4%. You're saying that in FY25, exports are expecting to go to the range of 8 to 10% of your total top line. You mentioned at the start of the interview that at this point of time, things are still subdued as far as the overseas market is concerned. So are you expecting growth in the exports market mainly to be back-ended? And what is giving you the confidence to go ahead and actually double your top line when it comes to only the exports portion of the business?
So export, definitely the market is not growing in terms of, if you consider specifically about the Europe and the US, But looking at the industry situation in Europe, there is an opportunity from the current industries which is not doing good, so that we can have a chance to enter, and all our products are getting approved. I think epichlorohydrin, which we have commissioned, there is a huge scope in the European market as well as in the US market. And last 1 year we have taken almost all customers approval, and probably we see the volume will start rolling probably from this year onwards. That's why we are
Okay.
expecting our export volume will grow in current financial year.
Okay, all right. Thank you so much, Maulik, for joining us and giving us those numbers and details as well. So that's the word coming in from Epigral. There's an improvement in domestic demand, but realizations continue to be under pressure. They're expecting 15% volume growth in FY25. However, the FY27 target of 5,000 crore of revenues, that could not be achieved because of the current pricing scenario. We'll slip into a short break. When we come back, we'll speak to you more on the markets and stock-specific actions, so stay tuned for that.